Hello, today is Sunday. It is the fourth day of January 2015. My name is Derek and welcome to the final part of the 2014 year in review video. We're taking a look at the dollar index to start off. It's actually a 110-day chart, not a 55-day chart. The reason for this is because my US dollar index data is a 2-day data, and I use 55 periods, so 55 multiplied 2 is 110, or the last 11,000 plus days spanning over 40 years. So the last 100 or so days ended with a gain on the index of 8 and 8/9, 885, or almost 11%, breaking past 90. Levels not seen in quite some time, as if you've been looking at these charts, they are definitely surging towards the upside. Okay, so what can we see about this? Big move up here, which obviously is the all-time high. Come back to the 18 average band, but no such luck. Thus resisting this band for a while, having it flatten out, coming up here again, but when it comes to support level for the second straight time in a row, unable to have a bull market. So two situations that this thing really tried to break out, both times failed. So since this point, downtrend, resisting it for a while in here. There's your band flattening out. Now it's breaking out. Its resistance will be established where, well, at least at 90, because that's where it is now. So this tells us now that whenever this tops, whether it's here, whether it's 92, whether it's 100, whether it's 113 or 26,000, that it's going to have to come back at some point. It's not going to 26,000 though. So you have the situation where come back to the band, let's just say it comes to 92. If it breaks established resistance, then it looks like we might be having a multi-year pattern of higher highs and higher lows, which means other currencies go down, this one goes higher, gold and silver most likely will be going lower, if of course that is going to be the case. Don't want to talk too much more about this chart. Let's take a look at a few other crosses. First one is the US Canadian dollar, looking at a 20-day chart, although the first 61 periods or so, 20 periods per day, since then 19, really no difference. Just enough so that I can get this entire move up to this top on the chart. Okay. I've talked about this before, and I've stated a key number 115.3. It's above that now, which means significant Fibonacci level. Just because it's barely went over this level now, it's closed this period above, doesn't mean that it's going to keep going higher, although that's a possibility. It's unlikely. What's probable is some sort of level of resistance at this mark that should at least come to this 18 average band. That's the probable event. As I was stating in here, one thing that I was looking for was a move first here to short down to here. That did not take place. Or B, a move down to here to go long to this point. That most certainly did take place, which meant profit taking should have occurred in the middle of December, and that's the key. Now, personally for myself, when I was looking at this, I thought maybe, just maybe, this Canadian chart on a global level might have at least intermediate significance, as if this level becomes resistance like I think it will, and it starts to maybe test this level, but even possibly lower higher and then break it, that this area, which would be a top area, would be the similar area to the lows of gold and silver. Don't know if that'll be the case, but something I've been thinking about for the last 3 years or so, or a couple years. See how it plays out. The next cross I want to take a look at is the ruble. The US dollar to the ruble. Yeah, this pretty much explains it. This thing was trading around 30 for years. 28, 33, somewhere in that ballpark area. And it closed the year at 58. And volatility, well, the volatility for the last 3-day period was in at 13.2%, and the median volatility in at 1.73. So volatility is much higher, literally crashing the US ruble. The whole point of this currency collapse that I'm talking about, I'm looking to see, or I'm predicting, a organic collapse, and organic being defined as in whatever form the people being dissatisfied, pissed off about the economic model, that they literally do something about it. That is the organic collapse that I'm talking about. But when within the paper, a digital game, casino gamblers making their bets to have markets like this, I do not consider to be organic. But looking at some more of these volatility stats within, I got this set up in thirds. Within the first 33 or so periods, the median volatility was 1.31%. The largest for the 3-day time frame, 2.79%, and 0.5%, a little over that, as the lowest volatility. The second third of this chart had a median volatility rise to 1.64%. A maximum volatility slightly increased to almost 3%, and the lowest volatility also slightly increased to 0.3%. But over the last third of this chart, with most of it a bigger volatility happening at the end, median volatility up to 2.79%, 42% as the largest volatile move, and the lowest one over the last 32 periods, 1.14%. "15 of the last 16 periods, though, contained 4.4% volatility or higher. Of the previous 84 periods, 0 of the 84 had at least 4.4% volatility. Lesson learned: when the shit in whatever faction hits the fans, volatility can massively increase. And this thing could even get larger. Who knows? But most likely this thing will probably get over 100 this year. That would most likely. I don't know what kind of manipulation they're planning on, but this whole thing, to me, is all paper digital manipulation. But every market is right now, so what's the difference? Now, as far as the ruble priced in silver, I'm going to put this up in a swing line chart. This is going back to April 25th, 2010. So this is where silver was $50 an ounce in the States. This would have been the 26th support in the States, and this is the 19th support for the United States dollar. But how fast it managed to go to these lows, close to the previous highs, and a massive retracement from like 1250 to like 800. And then, of course, up a little bit. So now the question is, you're here. Wasn't that long ago you were there. It was even less long ago you were here. So what's going to be taken out first? Silver priced in rubles going below, say, 650, 660 even, or going past 1260. Either way, it's probably not going to take relatively that long, but who knows? It could be in the sideways range of 1200 and like 800 for a significant period of time. Don't know. But if this plan is to really crash the Russian economy, then it's going to go up a lot higher. So if you're rushing holding silver, gold, probably a really good thing, as it would be for probably every other country's citizen as well. Now, what's tied to Russia is crude oil. And what a year for crude oil this year, as far as having a massive downward move going back to levels not seen since 2009. Now, what's interesting is the exports for Russia is highly dependent on crude oil. So here we were before at 106, 107. Now it's half of that at 53. Your currency has lost half, which means technically you are bringing in the exact same amount nominally on your exports, but your imports are getting destroyed because everything is costing twice as much more. Kind of, I'm just going to say noteworthy, interesting, makes me wonder when I see both of them going down together like this, as they are. People talk a lot about World War III and such. I remember 2008, 2009 talking or listening to Gerald Celente talking about currency wars. Well, this looks like we're seeing some of the currency wars right now. Are they only beginning? I guess probably, but they can do a lot of financial damage these days by sitting on a chair, typing a few numbers and letters on the keyboard, and pushing enter a few times. Thank you for watching this yearly year in review video for 2014. Have yourself a magnificent year, magnificent week, and I'll talk to you next weekend. Bye-bye.